Hi, I'm Jenica Mills from MLC, bringing you the 2019 Federal Budget Wrap-Up. It was a relatively quiet year compared to the last couple, but that said, some of the measures announced tonight may provide better outcomes and opportunities, particularly around taxation, superannuation, and cash flow. Let's take a look at some of the key announcements. But before we do, just a reminder that before any of the proposals become law, legislation will need to be formally passed, not all of which can occur before an election is called. It would also be a great idea to seek financial advice to understand how these proposals apply to you. Some good news on the taxation front for both individuals and eligible small and medium-sized businesses. Let's have a look at individuals first. The low and middle income tax offset will increase from a maximum of $530 to $1,080 per annum. The base rate of the offset will also be increased. The amount of offset you're entitled to will vary depending on your income. From 1 July 2024, the 32.5% tax bracket will be reduced to 30%. Together with the already legislated removal of the 37% tax bracket from 1 July 24, it's estimated that this will mean 94% of taxpayers will have a marginal tax rate of no more than 30% from the 2024-25 financial year. The existing instant asset write-off regime will be increased and expanded. This will apply from budget night through to 30 June 2020. An upfront tax deduction will be available to eligible businesses for assets costing less than $30,000, and this is up from the original threshold of $20,000. Small businesses are already eligible for the immediate deduction. However, it's also good news for medium-sized businesses with aggregated annual turnover of over $10 million but less than $50 million, who may now also be entitled to the upfront deduction for eligible assets purchased after budget night. There have been a couple of proposed amendments to superannuation this year. The proposals relate broadly to a relaxation of some of the contribution eligibility rules, meaning some Australians may be able to contribute more to their superannuation account. These changes are proposed to commence from 1 July 2020. The changes include enabling older Australians to contribute potentially larger amounts for a greater period of time, and relaxing the eligibility criteria for spouse contributions. Currently, if you're age 65 or over at the time you make a voluntary contribution to super, you need to have met what's known as a work test for that financial year. This means you need to have worked at least 40 hours over a consecutive 30-day period. Now, this generally applies with a couple of exceptions to most superannuation contributions, other than those that your employer has to make for you by law. The age at which the work test requirement kicks in will be raised to age 67. This effectively gives you an additional 2 years to contribute to super, even if you're no longer working. This could provide a great opportunity to top up your retirement savings. The other related change is that you may also be able to make much larger contributions when you're 65 or 66, an opportunity which also isn't currently available. You'll be familiar with contribution caps. Now, these are the limits on the amounts that you can contribute to super without having to pay additional taxes or penalties. The non-concessional cap is currently $100,000 per financial year, and these contributions include, for example, your personal after-tax contributions and spouse contributions. Currently, if you're aged less than 65 at the beginning of a financial year, you may be eligible to bring forward your non-concessional cap for the next year or two, meaning you could be eligible to make a contribution of up to $300,000 in a single year. From 1 July 2020, this opportunity is going to be extended to eligible individuals aged 65 or 66, as at the prior 1 July. And finally, spouse contributions will be able to be made for a spouse aged less than 75, and currently this is only available if the spouse you're contributing for is under age 70. Not only might a spouse contribution be a great way to boost your partner's super balance, but depending on their income, you may also be eligible to receive a tax offset of up to $540. Now, there are some other eligibility rules that apply when determining whether or not you qualify, so it's important to get some advice before making a contribution. If you are eligible for certain Social Security payments on budget night, you'll receive a one-off energy assistance payment. A payment of either $75 for a single person or $62.50 for each member of a couple will be received by those eligible to receive age pension, disability support pension, carer payment, parenting payment, and certain Department of Veteran Affairs payments. And finally, great news for ageing Australians, with significant funding announced for both home care and residential care services. That concludes our 2019 federal budget wrap-up. Just a quick reminder that those proposals don't take effect until legislation is formally passed to affect the measures, so sit tight.